I think the credit markets do feel good. A number of factors. I think you heard from Jan Hatzius talking about the economy being in reasonable health, soft landing being our base case as a firm. And from a technical standpoint, our investors in fixed income and credit products continue to see inflows. The other technical factor to consider is the lack of net new supply, which puts a balance into the market, which generally shows for strong performance in credit investing. What I mean by that is, if we look at, let's say, high yield year-to-date volumes, we're up about $100 billion or so currency equivalent, which is close to a record, but on a net basis, so netting out repayments and so on and so forth, we actually have negative new issuance today. So if you're an investor in high yield, you are struggling to stand still, netting your own inflows into funds, etc. So yeah, we feel pretty good about the market right now.
Yeah, does that pull back at any stage? I mean, do you see that net new supply kind of easing off a little bit then at the stage, or is that bound to stay? Is this a longer-term story, you feel?
It's probably a medium-term story. We'd hope to see more net new supply. That new supply is really created through acquisition financings, so sponsor-driven M&A, for example, corporate acquisitions, debt finance, for example, and we do expect that to grow. We are starting to see that increasing. So first half sponsor M&A is up on last year by 20 or so %. Last year was a pretty modest year in activities. Within that first half this year, though, the second half was much stronger than, the second quarter was much stronger than the first quarter. So we are seeing that trend of increasing sponsor M&A and increasing corporate acquisition financing grow, and that will help change this dynamic of net negative supply to, we hope, positive supply.
Very interesting. I mean, you make note of that M&A activity as well as possibly more IPOs. I mean, that's what we've also going to try and look at the end of the show as well. But has that shown itself in more financing requirements, more financing needs? What's set to create that sort of pickup then as well in this credit market? Is it going to be a lot more M&As as well as IPOs?
Yeah, I think that financing, I think certainly M&A will be a big factor. You asked the question of what could drive that sort of change, that increase in, let's say, sponsor M&A, for example. Look, I think there are a couple of factors at play here. I think the economy showing resilience in 2024 off a tricky 23 continues to give confidence to buyers of companies and investors more broadly. I think the inertia, let's pick on the sponsor world, for example, the inertia in the sponsor world with a pretty quiet 2022-23 means that the want to do transactions continues to grow through 24. And I think as we get through an increasing rate cycle and we now start to see rates reduce, that will no doubt bring more confidence to buyers of assets more broadly. And so we expect that to be a positive in terms of driving activity. You mentioned IPOs. Yeah, that's been a story of a decent first half, pick on Europe, but globally. We started to see IPOs return, some successful large cap IPOs, both from family-owned companies, private equity-owned companies, but also corporate spins that have been successful, so we expect that trend to continue. Again, we're off a pretty low base in terms of volume, so we think that'll be a story for the end of 2024 and certainly into 2025.
Yeah.